I think if you want just clean directional levered exposure on stocks, on crypto, on any asset, I think perps actually do slot in quite well to the overall derivatives offering. And so I think today it's amazing that somebody in South Korea without a brokerage account can go and long Nvidia on 10x leverage at 8 p.m. on a Saturday. Like, I think it's incredible now that they could do this on Hyperliquid. And I think there actually is a structural advantage for on-chain players like Hyperliquid to really become a dominant player in what I think will be not just a crypto trend. Like, I think perps will be a trend across trading in general.
What is up, everybody? Welcome back to Messari Unqualified Opinions. Today, we are joined by Kunal and Sunny, both enterprise analysts, for a year in review of DeFi. Yeah, so I guess we'll do a quick round of intros. My name is Sam. I am on the enterprise research team at Messari. I do DeFi coverage, pretty much, broad spectrum of things from emerging apps to info-related stuff like payments, CeFi. Yeah, I'll pass it off to Qorban.
Hey guys, I'm Qorban. I'm also an enterprise analyst here at Messari. I cover everything from DeFi to stablecoins. And yeah, so I'll pass it off to Sunny Monk.
Hello, this is Sunny, aka DeFi Monk. Was an enterprise research analyst here at Messari, but now I am a investor at Syncrasy Capital.
Hey, I'm Kunal. I was an enterprise analyst at Messari for 3 years, and now I do investor relations at Layer Zero Foundation.
Cool. So I think I'm excited for this pod. We're going to be doing some reflections on the past year as far as DeFi performance has gone, kind of look ahead, see what sort of defining trends we think will occur in 2026 and beyond. So just like a quick year in review, I feel like it's been somewhat of an odd year for crypto. It's been very choppy. We had some certain periods of outperformance, but overall, it's been very much a choppy year, I think, bouncing back and forth between chains, very much like a macro-led year. Some major themes were the resurgence in perp dexes, kind of led by Hyperliquid. We've seen a lot of new competitors in that space with Aster, Lighter, EdgeX. But I think Hyperliquid was kind of a defining moment for the whole space just because it was, one of the most successful apps ever in crypto. So that was pretty cool. Kind of led to a perpification of RWA's narrative with HIP3 launching, Ostium, seeing some equity and index perps. We've seen kind of the advent of prediction markets through Polymarket and Kalshi, both going bar for bar, and with the VC raises, it's been a really fun narrative to watch. I've personally had a lot of fun with it in this sort of pseudo bear market, some, secular opportunities there, but we've seen, kind of from launch pads, they've developed into these new fundraising platforms, tons of new launches and pre-sales, kind of a resurgence in the ICO meta almost. Still a lot of meme coin trading off the back of the Trump token launching all the way back in January. We saw the introduction of prop AMMs on Solana. That was a pretty huge narrative overall, took over 40% market share, pretty nuts. And kind of a sneaky resurgence in lending and borrowing activity through Aave and Morpho. Both of those charts have been pretty much up only. We're seeing this battle between isolated and monolithic lending playing out right now. So overall, I would say that even though DeFi didn't have the flashiest year, there was still a lot of development going on. I think that we broke a lot of new ground. But I guess just kind of high level, I'll put it out there. Looking back on 2025, what do you guys think the defining trends were?
I can go first. So it's been some time since I've done, these pods, but I'll just add that I think the smart contract wallets, though they're not typically fully DeFi, but that's been kind of a major theme as well. So we saw Stripe acquiring Privy, Fireblocks with Dynamic. So that has been a great trend. I think it's leveled up the UX across crypto. So a lot of new applications dedicatedly use, some of these smart contract wallets or wallet abstraction tools. And I think they're a big UX improvement. We've also seen, of course, prediction markets and, Sunny covered seemingly all of these themes, but prediction markets have, they've been clearly a breakout moment, but we've also seen sports betting, which isn't necessarily DeFi, adjacent to prediction markets. They are prediction markets, but I think that's a breakout theme as well. I'm particularly excited about the space. I will get into reasons why. And then I think we've seen a large number of kind of chain launches, right? So we've seen a lot of like corporate chains that have been announced or launched. So I think this week earlier we saw Tempo launch its testnet. Mega ETH is gearing up for its frontier mainnet is what it's called, what they're calling it, as well as like some Monad, Stable, Plasma earlier in the quarter. So like a lot of like great new chains, which I'm like particularly excited about. So yeah, so I think I would just add like those themes, but excited to like get into these themes for sure.
Yeah, I think you covered a good deal, Sam and Kunal. I mean, if I wanted to just distill it down, I think the three biggest themes this year, probably to both like crypto natives as well as this growing interest of exogenous participants and what they're excited about when it comes to crypto, is it's really just been stablecoins, prediction markets, and I think perps. And stablecoins, I think we're still trying to figure out who the other winners are going to be in this space, especially like the DeFi native winners outside of Tether and Circle, who most crypto native people don't really have access to, or they don't. It's not early anymore to participate in those names. And so we're still trying to figure out who the on-chain winners are going to be in the stablecoin space and what that looks like, and whether neobanks or any other layers are able to capture value from the stablecoin stack. Sam, I know you've been doing a great job covering the developments there. Prediction markets, really, I think just continued resistance against this prevailing idea that all there is to prediction markets are really just election markets and primary election markets, and we've seen volumes basically steadily just trend up month over month, which is something that we thought might happen after the big election market in 2024. And then I think perps is just completely leveling up as a narrative, as an infrastructure, as a DeFi trend. I think perp volumes were maybe the only DeFi native metric that was not down only this year, and I think that's going to continue to grow at a rapid rate in the years to come. We had the influx of many new perp dexes. We have this new pre-TGE perp dex farming industrial complex, which you can view that as sort of an inflation of near-term volumes, but I think it also goes to show just how far we've come in terms of what types of activity we can support on these exchanges on chain. And so happy to dive into that. I know we have more scheduled on the perp side, but I mean, those I think are the major overarching trends.
Nice. I mean, I think we're going to get into all of that, and I largely agree. I think for me, like the biggest theme overall was probably perp dexes. As someone who's like chronically on chain, that's where I spent the most time. I guess like making and losing money was on Hyperliquid, but I mean, I think it was kind of an insane rise, really unprecedented. We saw the protocol rise to just insane market share. A bunch of new copycats kind of in the market fighting for perp dex market share. Maybe I shouldn't say copycats exactly, like they all bring their own strategies, but overall I think it's a lot more competitive of a space today than it was at the beginning of the year. And on top of that, we also have this perpification of RWAs meta, which Messari Enterprise alumni Kinji kind of talked about last year. But I think that we've been just seeing like a ton of demand for equity perps over the last month with Trade XYZ volumes. They're now the 8th largest perp dex by open interest after a single month of operating, which is a pretty insane feat. So I don't know. I mean, what do you guys think? Is equity perps kind of going to be the defining narrative of 2026, or?
Yeah, 100%. I think this is the narrative. I mean, this is where I've been spending all of my time recently. This is what maybe we'll have the annual thesis out by then, but this is what I wrote about in the annual thesis alumni section. Look, I think if you look at the big trends today and what's really captured the imagination of people, not just in crypto, but outside of crypto, they were trends that were kind of percolating on chain maybe a year before, kind of developing amongst like a crypto native user base, and then really just blew up out of nowhere. I think crypto natives have a tendency to be early adopters, but I think they tend to undershoot just how big some of these trends can be outside of crypto. And so if we think about stablecoins and prediction markets in 2021, stablecoins were a trend. I think it was like a growing narrative, and I think a lot of people were continuing to use it. And then I think you saw the emergence of a new type of user of these people in third world countries really using it as a way to access the US dollar. But I don't think anyone on chain back then would have expected stablecoins to be as big of a narrative as it is today to Wall Street. I mean, to have Circle IPO, to have Tether reportedly be valued at $500 billion. You know, like I think these are things that we probably could have seen coming, but we really underestimated how big they could really be. And I think equity perps is that right now. I think equity perps, you're seeing some early adoption. You know, the infrastructure, I think, with Hyperliquid, some of these players who have been building in this space for a while, Ostium, and thinking about these design choices, they're hitting an inflection point where we can now get like maybe a 60% of a great product out right now. And that's enough for people to try it. And I really do think that this stuff, there's enough novelty, there's enough potential PMF. And if you just think about what could appeal to people both in crypto and outside of crypto right now, it really just makes a lot of sense. I think if you ask the average crypto trencher whether or not they want to leave crypto because prices are down and buy the S&P 500 instead, or even buy like a single name stock, I think most of them are going to say there's just not enough juice. Like, I think people are used to making 10x returns, and there's just not a lot of that at a high enough hit rate outside of crypto. But, you know, I'm not saying this is a healthy trend for society, but if you can offer them 10x, 20x leverage on the NASDAQ or on NVIDIA or on Palantir to go either long or short, I think all of a sudden it gets much more exciting. And this is just the trend of how trading as a societal trend is moving. Like, I think people want higher and higher and more asymmetric kinds of returns. And then if you look at the exogenous user base outside of crypto, I mean, zero TTE options, short dated options, they're becoming actually like the primary use case for these instruments. And that wasn't what these instruments were designed to do. These were instruments designed to hedge spot positions, to speculate on vol. And I think if you want just clean directional levered exposure on stocks, on crypto, on any asset, I think perps actually do slot in quite well to the overall derivatives offering. And so I think today it's amazing that somebody in South Korea without a brokerage account can go and long NVIDIA on 10x leverage at 8 p.m. on a Saturday. Like, I think it's incredible now that they could do this on Hyperliquid. And I think there actually is a structural advantage for on-chain players like Hyperliquid to really become a dominant player in what I think will be not just a crypto trend. Like, I think perps will be a trend across trading in general. And so I think there's a structural advantage for on-chain players, both from a regulatory perspective, but also because we've been building these automated clearing like exchange devices for so long that we are ready to just ship this now. And so, yeah, I'm incredibly excited to see how this develops, and tying this back to some of the trends I was talking about earlier. I think it's something that we think is exciting on chain today, that crypto natives are talking about on CT, that there are still a lot of people doubting because we just haven't seen a lot of precedents for it. But I do think once this gets rolling, it's an incredibly marketable product to users outside of crypto, in crypto, and it's also an incredibly marketable narrative to people outside of crypto. And so I think this is going to be the new S tier narrative that emerges out of the crypto native scene and becomes a phenomenon that's greater than that, either next year or the years to come. But I really don't see anything else that I think has as high of an upside as equity perps and RWA perps, but equity perps primarily.
Yeah, I totally agree. I mean, I've spent a lot of time covering this. I put out a report on HIP3 where I was, really excited. I think short-term expectations, for me at least, are like a little conservative, just because I think that there's going to be some like ramp up period essentially, which, just as people acquire tickers, we kind of see like certain niches get built out, indexes built. Yeah, but I mean, overall, like Hyperliquid already has that extremely liquid environment for equity perps to thrive in. So I think it slots in really nicely with their existing product. I think it makes a ton of sense for Hyperliquid to expand into this to build some like sort of, secular demand beyond just the cyclicality of Bitcoin. So yeah, I'm super excited about equity perps personally. I feel like we're kind of in this like Goldilocks zone, like you said, where the tech is ready, the liquidity is there, the regulations kind of allowed the on-chain perps platforms to like have a head start. So I think that there's no better time than today.
Yeah, Sam, I guess when you wrote your initial HIP3 report, like, did you expect Trade XYZ or HIP3 perps in general to get to almost $6 billion in volume, like less than 2 months out. I think it's, yeah.
I think what I expected was that Trade XYZ would outperform in part because people thought that they were farming unit. I think this is more than that. Like I think this is like some like clear demand. It's hard to say for sure, but I would like to see some more demand from like some of the other platforms that are launching equity perps. So like I know Ventuals just launched like a Mag 7 index. I think that'll be super interesting. Felix has been launching stocks as well. I'm sure that I think what's going to happen is we see like a little bit of fragmentation across like everybody launching their own or acquiring their own equity tickers. What's really happening is like this is all on the back end, right? Like it's all abstracted away from the user at the end of the day. They're still buying the same tickers on like every platform. I think it's just a little weird in this like ramp up period where people are like, what is the nature of like these different HIP-3 protocols like fighting for these tickers? Like why does it feel like oddly competitive across them? But at the end of the day, they're all just gonna be listed on the Hyperliquid front end, so it's not really gonna matter.
Yeah, and I've been honestly playing around with these like markets a lot, and admittedly they're janky. I also don't think this is going to be the final iteration of what they look like on the UI because there's so many different deployers that it gets confusing. But this is like less than 2 months out from the actual real release of this type of market. I'm sure we'll figure it out. And I'm sure there are other players coming to build upon this narrative right now. And I think there are a lot of teams building in stealth to try to win this huge TAM of equity perps. But we really get to kind of play around with the concept right now on Hyperliquid. And it's not perfect, but it like kind of works. It kind of works, and it's just great because like if you can get this to like, let's say, from a 50 to 60% completed product to maybe like a 70 to 80% completed product, and you're trying to make a trade on what the market open is going to look like on Monday, and right now it's maybe like 11 p.m. on a Friday, you might be one of the only people in the world that can actually make this bet on Saturday, and it's on Hyperliquid. And I think that's like in a market like this, I think like speed wins, and there's just a lot of things that typical retail traders are gated out of. Like they cannot go an OTC trade like through a dark pool on like a during an off hour moment. And so yeah, I think we don't really need to get like a 100% finished product to see what this is going to look like. I think if we get to 65, 75%, this product is really so novel and so useful that I think we'll really start to see demand inflect. And I'm excited to see what happens when we get billion-dollar volume days on just equity pairs. I think that's going to be insane to watch.
I'll just come in here. So I see, this like broad trend playing out in two ways, right? So one side is the trading aspect, which is like the perpification of all real world assets. But I think another side to this is the tokenization of all like real world assets, right? So that is holding spot assets for, which have real world representation, whereas perpification is more, trading the derivatives, and you can have typically, you can have higher leverage, although you can have margin on spot accounts as well. So how I kind of articulate this thesis is more about expressing your, your view of the world in a spot asset format. So if, I had this tweet some time back, but if I am bullish on anything that is like information, whether it is Sunny's follow account or neobanks has a thesis. So I think there will be like a spot contract for that I will be able to buy and express my opinion instead of in words, in like dollar terms. And that I think is a very powerful solution in and of itself. So I see that as like a very big like global trend. So you can long, a president's odds like 20 years out. So, someone's, like if someone wants to long, certain politician's son, their odds of being, president 20 years out, then, that's like a good bet to make. I think Perps is like an inferior product for like long-term bets. My history is largely in like, like equities and spot, not so much as like, derivatives and like hedge funds. But so that's how I view of this world, like how I view this on-chain world, where I'm expressing any opinion which is supported by prediction markets, tokenization platforms, any any kind of like crypto infrastructure that we have built already, and that's how you express your opinion. So I think that's like a supporting complement to what Sunny is saying. But in just like the difference is in owning an opinion versus like trading infrastructure. I mean, trading probably makes more money, but I think ownership can have like some kind of longevity, which trading so much doesn't have. So I do see like tokenization and spot assets also being very, very powerful.
Yeah, I completely agree. I feel like off the back of that comment, Kunal, we could probably pivot to prediction markets just because that's like a very similar conversation. I think that like yeah, we've seen like absolute domination from Polymarket and Kalshi as they both have just grown insane amounts over the last year, raised a ton of money. Is there room, do we think, over the next year plus for improvement on these models? Do we think that we'll see like more on-chain models where there'll be composability of these prediction market positions? I know Morpho just launched something, but honestly, I'm a little skeptical of how that works just because of how volatile these are and the additional liquidation risk that comes with expiration. Yeah, I don't know. I mean, what do we think that like the next year will look like for prediction markets? What does improvement look like?
I actually think it's funny because I think we were talking about this internally at Synchrony, and we were talking about I think we're going to start to see more skepticism around prediction markets coming soon because they've raised now at these pretty large valuations. Like they've kind of been the talk of the town, and at some point you have to justify that, right? And I think it's another example of something that when you peek under the hood, you're like, okay, like there are some issues here. And then I think right after that, I forgot who it was. Who was it that like I think it was it Jez? Yeah, I think it was Jez who started talking about the overstatement of volumes on these prediction market platforms. And I remember when I was writing my Polymarket report, that was an issue that I had to deal with where I was like, okay, these notional volumes maybe don't make a lot of sense. And I had to try to clean the data for that. And so it's interesting that we're still, I thought people kind of knew about this, but I guess not. I guess not. And I think that's the issue. I think another example of this is like I always like I'm a Knicks fan. I was trying to pay. I was like, okay, let me go check because I saw like this like NBA Central posted a source on Twitter that said, hey, like Polymarket, or it was either Polymarket or Kalshi is expecting right now the New York Knicks to be the favorite to land Giannis Antetokounmpo. And I was like, oh, that's really interesting. And so I clicked into the market and it had $90,000 of like lifetime of cumulative volumes, which is like less than what an average shitcoin on Solana does in like an hour. And so I think we'll probably have to figure out who is actually going to trade these markets. I think they're great for news, right? I think they're great for news and media. But the reality of the situation is you can't have Polymarket as a source if people don't trade Polymarket markets as a way to make money. And another Messari alum, like Tulip King, like he's going through this right now where people are trying to figure out like how to make money on Polymarket. And I think 2026, hopefully for Polymarket and Kalshi, will be the year that you get real traders who are profit interested moving onto the platform now that they've heard about it and now that they've onboarded to the platform, trying to figure out how to make money on the platform or trying to just make bets on the platform. And I think if you can get that, then the rest will follow. I think the rest will follow because the narrative is as imaginative of a narrative as we've seen come out of crypto. I mean, there's just so many applications for prediction markets across so many different sectors. You can see this being like a hedge fund type of exchange, as well as a retail type of exchange, as well as a news type of exchange. And so I think the applications are really endless once you get this thing running. But I think this year we kind of have to hone down and just figure out like, okay, like what are the markets that people actually want to trade? Like how are we going to make, or how are Kalshi and Polymarket going to make them more pleasurable to trade? And how are traders actually going to view these markets? Like, do they actually think that there's alpha there? Because I think if you peek under the hood, there's a lot of issues that will probably start bubbling up in the overall conversation when people step back and go, okay, like, are these things worth like $15 to $20 billion?
Yeah, I'll just add that I think prediction markets are the one use case in crypto that has broken out this cycle. So the last cycle was probably like NFTs, but now if I go out in the real world, meet some people, I think they do know about Polymarket and Kalshi. So I think it is a large enough narrative where it has outside of like crypto native mind share, maybe just after NFTs and stablecoins. So it's definitely had like a big moment. Maybe that doesn't support like the valuation so much, right? Like so typically when these things are breaking out is when they're maybe peaking in valuations, but I haven't run the numbers since Sunny did his report. So like I won't really comment on that. I think they're there's still like very useful products which will do well, but whether the valuations will sustain, we'll have to see like how much trading volume they can kind of incorporate, whether they can have like, as Sunny was saying, that can there be like professional market makers who are market making these like sort of bets, and it's just very hard, right? So like outside of New York Knicks or like Giannis's internal whatever team, no one really has an opinion on whether that is the most likely, or doesn't have an informed opinion on whether that is like the most likely, but someone does, and are market makers willing to trade against those insiders? And this isn't MNPI, because these aren't securities, these are having an opinion on like on information which is completely legal. I met someone the other day who does analysis for like using satellites, and they have apparently some analysts there are trading prediction markets based on what they are analyzing through their satellite data, which is incredible to like even hear, right? Like I don't think they're on like any other crypto platform, or they haven't been since like NFTs, but they do think that they have an edge there, and it is useful for us that they're trading these markets because it surfaces better information, right? So if someone knows what's going to happen with like a certain tornado's like path, it is useful information for everyone else, because they can objectively find out whether they're likely to get hit by that said cyclone or tornado. So I think prediction markets have had like of course a breakout year, have transcended crypto native mindshare, have moved over to like traditional mindshare, and I think going to remain exceptionally useful. Valuations typically peak around like when these things happen, but still like some numbers have to be figured out. They need to figure out market making for the long tail off. Like the most interesting trends can be like the long tail trends, the long tail markets, but as Sunny said, they have like very little volume, so they don't necessarily surface the highest quality information.
Yeah, I largely agree with. I think I largely agree with you, Kunal, that I think like as a consumer app, there hasn't been anything that's been more mainstream, has acquired more trad partnerships like with news companies like CNN or like with Twitter than prediction markets. So I think it's been an exceptional thing to watch. I know, Sonny, I feel like to your point that like there could be some like, I don't know if this was your point. I know Watkins put out a tweet that there could be like some public backlash against prediction markets in the future. I think like one of the things that people like criticize about prediction markets is their ability to like influence real events, right? Kind of like this whole self-fulfilling prophecy narrative. And I push back a little bit on that being a problem. I think in many instances, it's actually really interesting because it could essentially democratize lobbying, right? In a way that regular people can influence real events in ways that they never could before. What does that actually look like? I think we're like, we don't know yet because these applications aren't necessarily big enough, but it's got the eyes of a lot of politicians, a lot of news companies. CNN is partnering with Kalshi. So I think like as Kalshi and Parley Market increase their distribution, it's something that politicians have to pay attention to, right? It essentially gives them edge on what their constituents want. And so ultimately, to me, that's like a way for people to express their opinion about policy and regulation in a way with their own dollars that only corporations could do before. So I think it's a pretty unique thing. That's like a max upside thing to me, where it essentially becomes like a political tool for us to like democratize lobbying. But I think that that's kind of a really cool scenario that I would like to see play out.
Yeah, I mean, I think politics has kind of just been really the core, like underlying backbone of prediction markets since they've been formed. I mean, the highest volume markets tend to be election markets, and so it also has the least amount of competition and the most amount of white space. I mean, if you want to get into sports, there are some major players worldwide that are competing in the sports category. Obviously, if you want to get into financial assets, you're competing with the stock market and the crypto market and all these other exchanges. But politics is just an area that we've kind of kept separate from like the guiding hand of the efficient market. But I think I'm curious to see what happens, and I guarantee you that politicians today are already paying attention to prediction market odds. I mean, they have to be. And I still remember watching Trump win the election in 2024, staring at like the poly market odds, because that is actually an example of a market that does so much volume that you can actually use it for real predictive information. And I think Trump's odds were like at 98% when all the pundits were still saying this is like a toss-up race. And I just looked over to my friends. I'm like, I think it's I think it's like pretty much over. And everyone was like, dude, like what happens? I'm like, okay, but like it's say like it just jumped to like 98% on like a $20 billion notional volume market. And so yeah, I agree with you. I think the actual real applications are endless. I think Vitarki is another thing we haven't mentioned that could come out of liquid prediction markets. But for now, for just 2026, since this is what the pod is focused on, like I think this is like 2026 is going to be a year of prediction market rationalization and probably more skepticism that they'll have to deal with like than any other year.
Yeah, I'll add a couple of things. So this idea of them being like bounty markets or assassination markets has like I think that notion has existed for a while. I think it's it's a little bit of people being averse to like new things. So the Apple stock can always be kind of like an assassination market for like its competitors' CEOs, right? So if I am a large like Apple whale, maybe it is in my best interest for like it to not have like very smart competitors, right? Like the CEOs to follow. So I think those risks are like overstated. I don't think anyone. I mean, people do break laws, but it's not based on their. It's not fair to assign blame to the markets for someone to choose to like kind of break the law. And I think that's like largely people being afraid of new technologies, a little bit of nimbyism or whatever you want to call it. So it's not, I don't agree with that. I think what I do agree with is that futarchy is like how I frame it is that like futarchy is like the TAM isn't like it's like it's going after democracy. So it's like going after how like decisions are made instead of one person one vote. It's moving policy forward in a way which is maximizing the like the value of the dollar or the Swiss franc or whatever it is, right? So I think that is a great way to look at like futarchy, and that is uniquely only enabled by prediction markets. So I think that is a very exciting space. Even if you don't want to call it like like it replacing democracy, you can at least replace like board of directors. So instead of a company making like high level key management personnel hiring and firing decisions based on like like a handful of people, right? Like what happened with OpenAI when for a moment they had like let go of Sam Altman or something like that was going on. If the markets were involved, perhaps it could have been a smoother decision and could have worked out like better for in that moment could have worked out better. So yeah, so I think I really think that the TAM for like futarchy is really big, and I'm excited about the experiments in the space. I think crypto again is uniquely positioned for enabling futarchy, like global permissionless markets for moving capital, making bets. So it's a big TAM that crypto only can perhaps provide.
Totally agree. I think that let's pivot to stablecoins, and we'll kind of wrap up after that with maybe like looking ahead to 2026. But yeah, I guess first, we've been seeing just like so many new stablecoin products on the market in the last like year or two, and I think there's been a ton of demand for these essentially like yield funds wrapped in a dollar, right? So with like Maple with their private credit product, USDAI with their like GPU lending product. We've got DeFi coming out where they're essentially wrapping up like an energy debt portfolio into a spendable stablecoin. I think it unlocks like a lot potentially new use cases, new demand for people that aren't currently in crypto but might be looking for like diversification in either like their bond portfolio or like I'm mused about this a bit on like the DeFi bank stuff, but essentially if I can in my bank account opt for like a diversified portfolio of these yield funds instead of like T-bill yield that just gets me like 3.5%, if I can juice that up to like 8 to 10% just through like a couple of these funds, like I'm taking that any day. And then I think we get into some like really cool passive yield opportunities. But yeah, I mean, what do we make of this? Do we think that this is going to be like a big trend in 2026? Do we think that we're going to see more demand for like exogenous revenue through these spendable yield funds? Qorban, I'll pass it off to you first. Stablecoin intern. What do you think?
I think overall, yeah, I think you're right. I think the trend is going to increase, especially if rates do come down. I mean, right now there's going to be at least 2 rate cuts in 2026. And so as those rates come down, alternative yield funds like Athena, Neutral, they become a lot more attractive. I mean, all throughout 2022 to 2024, as rates were high, the goal was to essentially bring on like TradFi assets on chain like T-bills and how to loop those. But then as rates come down, it's probably going to be the opposite. And I think projects like Athena will do really well. I think overall crypto does a really good job at attracting the two extremes. Either, you have you have meme coins and perps as like maximizing volatility, and then you have stable coins and these yield funds to maximize yield. And I think crypto is really good at sourcing liquidity for that and growing those types of yield funds. So I can definitely see them taking off in 2026.
Yeah, Sam, I think it'll take a while for people with bond portfolios to be on chain, like, to be honest. I think that right now it's not the target audience.
Was that too ambitious?
Yeah, but look, I mean, Qorban touched on this. Like, what we've seen from these yield products, and typically how they intermingle with like the actual crypto native user base, tends to be, one, like, if you can loop them, people will loop them. Two, if you want to use it as a stablecoin alternative, then people will use it as a stablecoin alternative when they're exiting out of positions, when they're just holding assets on chain that they don't want to touch just yet. And three, what I think will be really interesting to explore, and kind of Athena is doing this right now with Hyena, is using them as collateral for separate positions. And so I think all of those things will continue to be like slow budding, steady growth trends in this space. And actually, I think yield lending, this whole other spectrum of crypto that Qorban just touched on, that kind of sits on the opposite end of like the hyper degen, like speculation side of crypto. It's just been actually just steady growth. Like, if you look at a lot of these top protocols, they just grow pretty consistently across a pretty long time horizon for crypto. And I think that will continue to happen. It will never really be the forefront of what's happening on chain for now, until we get those people who actually have bond portfolios on chain. But until then, I think this kind of stuff is just really fascinating to see kind of grow, and they become composable assets within a broader DeFi ecosystem that is fueled by speculation and leverage. And I think it's really interesting to see what kind of money Legos we can kind of create with all of these things just proliferating on chain. And so I think it's something to watch for sure. I think it'll be a while till you see people interested in these assets on chain for like entirely for the asset itself. But right now, I mean, these are some of the only things on chain that are just growing like actual businesses year over year.
I mean, I would disagree with Qorban in that I think this is more degen. So most like stablecoin farming can be more degen than meme coins. I think when the risks kind of play out in the stablecoin space, they're worse, or people are more exposed through looping because they've levered themselves up to like, I don't know, 15 times and can be liquidated much more easily. So I think that for stablecoins, execution matters a lot. So as we saw on 1010, Athena was like kind of one of the few protocols that had negotiated to not be automatically delivered on their on their sex trade. So I think it is on their centralized exchange trade. So I think high like bar for execution is very important for stablecoins. I'm not sure how much the new entrants will be able to take. I think when crypto natives, they make a profitable meme coin or perp trade, I think they want to come back and retreat into like the large stable coins and not still remain exposed to the tail end of like risk. So yeah, I would say I think the dominance, which is USDT, Circle, Athena, I think they remain by far the largest in like similar market, with similar market shares. And I think unless they have, unless for a shorter period during like farming, I'm not sure whether we see a new entrant breakthrough, just because we haven't seen, like, I just don't believe that crypto natives are looking for that. I think they have enough risk exposure for the most part. So I don't think that's an exciting trend.
Yeah, I think the way that I've framed it is that it isn't necessarily like people looking to gamble unless they're going on like Pendle, right? And they're trying to like gamble on the yield. I think I've thought about it more as like a spendable mutual fund, which I think is pretty cool, right? There's nothing like that in TradFi today. So like you were saying, Kunal, something you can retreat into like your bank account, but also spend from, whether it's via the actual token if there's enough liquidity, or like borrowing against it with a credit line, or like an over collateralized loan. I think that there's a lot of different ways that it could look that would be interesting to users, just because I mean, I agree with Qorban that there's like a sector of people that are like seeking out that interest yield, which will looks like it's going to be compressed over the next year. I think those people will seek out new yield bearing stablecoin opportunities. There is undoubtedly some people that don't care about that and they're just sitting in USDT or USDC because it's safe. And I'm not sure if those people would convert unless the option kind of presented itself as like a diversified portfolio, or maybe you held 70% USDT, 30% some mix of these mutual funds or yield funds. So I think there's a lot of ways to look at it. I think it's probably going to be more passive than something that's like actively traded, like a meme coin. And it's probably going to come down to like the custodians, like the DeFi banks essentially, and like what they provide. But it's something I'm excited about over the next year. I think, there's been some pretty insane demand for Maple. They've constantly provided competitive yield against Treasury or against T-bills. USDC is offering something like between 8 and 12% right now. I think DeFi is going to be really interesting when it launches. So I think we're going to see a bunch more of these. Something I'm excited about.
Yeah. Maybe one thing I'll add is there is some room right now for like a new preeminent yield meta. Like there always is. Like there's always like something that is that is the best yielding asset that people like at any given point in time, whether it's USDE or liquid staked ETH or Ponzi's in 2021. But I think right now, like you have both on-chain yields coming down with diminished like actual on-chain activity, like USDE APRs have kind of dropped. You have like Qorban mentioned, TradFi, like T-bill denominated yield coming down with rate cuts, and so there is some space right now for like a new preeminent yield bearing asset to come in and spark a meta. But I just don't know what it is yet.
Nice. Yeah, I mean, I think we can start to wrap up. So looking ahead to 2026, I guess just really quickly, curious to hear what you guys think. What chains do we think will see the most DeFi activity next year? Yeah, where are we looking?
Yep, I'll go in like quickly here. So I think we've seen, so this is part of like my alumni thesis as well, that we've seen meme coins capture a lot of, speculative value away from, large like DeFi assets. So I think now DeFi assets are perhaps like reasonably valued. This was, the Murad has talked about this, I think back in the day, even Dejan Spartan talked about this, that how like DeFi assets have a large like speculative premium. I think that doesn't like happen so much anymore. That is all captured by meme coins. I think what is going to play out now in, like 2026 is a return to assets which have improving fundamentals. So, since the discussion is still, where are the new chains going to, which are the new chains that are going to be exciting? Where is DeFi activity going to be? So there are so many. I think then this like experimentation will continue, right? So Tempo is compelling for its reasons, right? It's backed by Stripe and Paradigm. They are large like incumbents that can make things happen. Mega ETH is exciting for very different reasons. It has this very different architecture. For the first time, it'll be the fastest chain when perhaps it goes live, and has this like unique set of like applications that it has incubated internally. So I think we will see multiple new chains, and I remain very excited about all these new chains launching. I think we will see an acceleration in like tokenization as well. So whether that is through like trading through like perpification, or like having like spot exposure through tokenization, I think both of those trends will remain. So which is why I'm very excited about like Layer 0 and its future, because it connects both all these new chains and all kind of like tokenization attempts, right? So instead of launching on one chain, why not be on all the chains, and you have access to the most amount of users and capital. I think we have also seen like this growth in like chain abstraction, which is like a dead narrative. I covered it in like 2024, but we've had like this like application already being like this. So when you use FOMO, it is a chain abstracted kind of application, right? You do not know what, or do not necessarily have to know what chain you're transacting on. So I think this is, instead of saying like which chain, I say like all the chains, and like an acceleration of new chains launching, and this continuous growth in the ecosystem, and like an acceleration of tokenization, which is why I'm at Layer 0 and excited about it.
Yeah, I think the big thing for me is obviously perps. I think we'll see perps grow even more than they have in the years prior. I think we'll see new types of perp exchanges taking different trade-offs. I think we'll start seeing new assets being tradable on perp through perp pairs, equities primarily. And yeah, I mean, we talked about this before, so I don't have to get too much into it, but I think we're still trying to figure out who the second player is going to be in this space. I don't think it's a given yet. I think Hyperliquid still by far has the most structural advantages and is the furthest along. But with there's going to be a lot of new perp exchange players, and I think that will be a fascinating competitive development to watch play out. Outside of that, I think look, I was talking about this kind of when I was at Messari, but I think the pendulum has a lot of room to swing back to ETH still, like the entire ETH ecosystem with Mega ETH, like new rollups. I think you're going to start seeing with the Market Structure Clarity Act, you're going to start seeing a lot of blue chip DeFi protocols really, really, really dive into value accrual and really, really start to gain attention from institutional exogenous investors and participants and Wall Street and TradFi. I think a lot of people still are waiting to see what's going to happen from a regulatory standpoint before they really dive into these products. And so I think for blue chip DeFi, the Clarity Act is going to be one of the biggest catalysts for DeFi in crypto history. And so I'm excited to see what happens there. For Solana, I think obviously we didn't get to touch on prop AMMs, but that's probably the most interesting thing happening on Solana. And at this point, I think prop AMMs are here to stay. They're an obviously superior way to facilitate spot AMM transactions. The problem is, I think a lot of the success from prop AMMs has congregated or concentrated on specific large blue chip pairs. And so whether that's Sol USD, whether that's like stable pairs, I think usually majors and a stable. And so I think for Solana, we still have to figure out like what are the persistent long tail assets going to be, because that's when Solana is really playing at its best, is when there's a ton of long tail activity. There's assets being minted and created and issued on the platform that creates all sorts of different layers of the Solana value stack to kind of participate in, whether it's front ends, whether it's aggregators, indexes, and launch pads. And so I think we're still trying to figure that out for Solana, and I'm sure they will figure it out. But outside of the prop AMMs, I think for Solana, I'm just really trying to figure out what is going to be the next meta for Solana assets that are natively minted on that blockchain and can really do well, outside of just figuring out how we get majors trading more efficient on the chain. And there's also going to be a lot of exciting perp dexes spinning up on Solana, so that will be something exciting to watch out for. But yeah, I think that's pretty much all I have.
Nice. Yeah. As I've written a lot about, I'm very excited about what crypto neobanking will look like, new ways to capture non-crypto natives via embedded DeFi. That can really occur on any chain, right? It can use multiple chains for DeFi and for payments. It's really something of like a hybrid cross-chain experience, I think. But yeah, I think that's like something that I've been really excited about for the next year. Ultimately, like I agree with Sunny. I think that we've strayed kind of far from like the Ethereum value prop and what decentralization means to crypto in favor of the permissionless regulatory arbitrage aspect of things. I think that we will probably revert back to the decentralization aspect at some point in the near future and recognize that, that Ethereum does have this sort of like economic security mode, as Kunal has written a lot about as well. But yeah.
I can't believe that you guys are bullish on an asset that has a PS ratio.
I'm not bullish on ETH the asset. I'm bullish on Ethereum the chain. I should clarify.
You know who was bullish on ETH the asset? DeFi Monk in 2024. I think very particularly said that ETH would outperform Sol in 2025. And so I do think, we tend to get caught up in what the trend of last year was and not think about how things could change going forward. I still think there's some room to work on the Ethereum narrative and having it be at the forefront. And so, yeah, I don't think this is something that just reverts back to what it was before. Like, I think this is probably something that warrants like a longer term discussion. But I think Sol did underperform ETH by like 25% year to date. And so unless that changes in the 3 weeks we have left in the year, I'll do a victory lap.
I love it. Sweet, guys. Well, we can wrap up there. Thank you, everybody, for joining. This has been a great year in review and looking ahead. And yeah, we will catch you guys at the end of 2026. All right. Thanks, everybody.